Hello, good evening, guys. Do you think the housing market's going to crash? What's going to happen in the 90 days? What's going to happen for this latter part of the year? We're going to be talking about all those things. We're going to be talking about the housing market in the Dallas-Fort Worth area and many others. So if you have questions, feel free to leave them in the chat now or later. Thank you guys so much for taking a look and watching. But first, we're going to start off with an article. So I'm going to share my screen real quick. Let's see. We'll do this. All right. So this article. Looking for a housing price crash? That's unlikely, real estate economists say. All right. So with inflation still on high, one economist foresees 12 more months of pretty tough headwinds. So now this is nationally. We're going to start nationally, and then we're going to dive into more of the analytics here in North Dallas and DFW. So the nation's housing market is going through a correction, not a crash. I know a lot of people have been talking about, oh, the crash is coming, the end is nigh, we're going to see prices fall, we're going to see prices plummet. I can more see this being true, an actual correction, than a crash. While sales are down and mortgage rates are up, home prices are still rising because there are few homes for sale. Now, I would say sales are down, not in the sense that not enough people want to make a purchase. I think it's more of an inventory issue, which is kind of what they're alluding to here. There's just not enough homes on the market because people are still in that 2021 mindset of where am I going to go if I try to sell my house? So that's been kind of what we've been seeing in the market lately. It says, and after a decade of rising prices, and I have not so good news for you, the prices are going to continue to go up, especially in the Dallas-Fort Worth area, and just everything that's happening with the national economy and all the businesses relocating to Dallas, to Austin. I think even parts of San Antonio might be picking up some things as well. But Texas as a whole, I feel like it can be a pretty sheltered economy compared to other states and nationally, kind of what the big headlines that you're seeing. And some of the big headlines are saying, oh, it's going to go down. The prices that, we're going to see prices plummet. We're going to see prices fall because there's so many homes. Well, guys, the reality is that there's not a whole lot of homes on the market here in Dallas. I'm experiencing that with clients that I'm working with, and even new construction is starting to get a little bit more limiting as we continue to move through the summer. So we'll see how the inventory trends, and we're going to take a look at some of those numbers, but let's get back to the article. Sorry, let me share that screen again. Present. Oh my goodness. Here we go. All right, so yes, prices are going to continue to go up. If anything, I would say that, if anything negative happens, that the market would more stabilize and level out versus like a full-blown dive face first into the pit. It says, let's see, after a decade of rising prices, commercial real estate values have been dropping steadily over the past 18 months, which you can see why there's no doubt, particularly offices. See, I knew I was going to suggest office spaces is what they're going to be talking about. There's not as many people post-pandemic that are needing an actual office space. They're usually officing out of their home for that. So that part of commercial real estate is definitely hurting, and people are getting more creativity around what could be done in those spaces too. It's going to take 2 to 9 years for building and warehouse values to get back up to 2022 levels, creating some risk for banks. Okay, this is more about commercial. Those are among the conclusions from more than a dozen economists and analysts speaking at gatherings of real estate journalists in Las Vegas earlier this month. All right, we don't foresee home price declines on a year-over-year basis nationally. Selman from CoreLogic says, We have had a lot of volatility on prices, but in most markets, we are basically going back to long-term trends in terms of home price appreciation. That's a mouthful right there. She predicted that the home prices for 2023 will be up 4% from last year, and I'm pretty sure that's going to be higher for the Dallas-Fort Worth area because of some of the numbers that I'm going to show you guys too. A more conservative outlook from the National Association of Realtors projects that prices will be up 1.8% this year and 2.8% next year, which is crazy to me because rates have gone sevens and past that. And the Fed, even though they've said that they're putting a pause, and we'll read an article about that a little bit later, but I know the Fed is putting a pause on rates, but they also said that they're going to increase more likely towards the end of the year, so towards Q4. Rising prices may be good news for home sellers, but they don't spark a chorus of hosannas from already crash-strapped buyers faced with unaffordable home values and increasing mortgage payments, which is completely true. The average U.S. home buyer needs to spend almost 38% of his or her income on house payments based on June prices and mortgage rates. And yes, that's kind of the trend that I'm starting to see. And I feel like that number is only going to continue to rise as people try to get into homes or try to squeak into homes as to avoid rent. And rent, even though I've seen headlines for rent going down, rent in single family, we're not talking apartments, but rents for single family homes here in DFW have either stayed the same or gone up. So I'm not seeing rents to be calming down anytime soon, even though it may be a little bit. I mean, rents typically are going to cost you more money than making a purchase, but I think they're pretty even. I know a lot of investors are looking to, I've seen a lot of previous investment properties on the market too. Let me just kind of give you a heads up on that. So I have seen a lot of previous or investors that are looking at putting their homes on the market because of property taxes. And property taxes, not that property taxes have gone up, but home values have gone up. And so as a result of that, it's increasing property taxes to where it's very difficult, even for my husband and I, we're looking at our rental properties that we own, that we have. The hard thing about it is that when property taxes or when values go up, property taxes go up, insurance has gone up within the past couple of years as well. And so that's creating a larger burden with our mortgage that we're paying on the house. And so our margins are getting smaller and smaller and smaller to where some investors are looking at just, putting it on the market and cashing out that appreciation and then, doing a 1031 exchange and allocating that money elsewhere or paying off debt or whatever they're trying to do with their money. But that's been a big trend that I've seen as well. So let's go back to the article. Share screen. Okay. So I think they bring up a really good point about that the average home buyer needs to spend 38% of his or her income on house payments. Now, typically the good rule of thumb is 1/3 or 0.33333%, right? So they're having to spend a little bit more. And like I said, that trend, I believe, is only going to continue to go up and up as time progresses. And as the unaffordability crisis continues and looms on. In LA, the typical sale would eat up 84% of an average income up from 61% at the end of December. So let's see. Home sales remain depressed in the nation in Southern California, creating some chaos. So there's crazy things going on in SoCal. I'm guessing maybe people want to leave that area, which is why there's so many more homes on the market. Let's see. What's going to happen to the housing market and the economy if you cut that many jobs? So jobs are also an issue. There's a lot of companies that are leaving California and they're relocating to other states like Texas, Tennessee, Florida, any state that's more business friendly. We've seen a lot of companies move and relocate to business friendly states in recent years, for sure. And I think that that's also causing an impact not only on the housing market, but on the job market, is what economists are saying too. Mortgage rates to fall. Nevertheless, most economists at the conference expect the housing outlook to improve for sellers thanks to a limited supply of new listings. So it's good for sellers right now, and easy mortgage rates. And easing, not easy, and easing mortgage rates. So having those mortgage rates ease up over time is going to be good in the long run. After averaging 6.4 this year, rates for the 30-year fixed loan will fall to 5.6 by the end of the year, which to me, I don't really see that happening because the Fed said that they are going to actually increase rates towards the end of the year. I can see that more happening maybe in 2024, which it says 2024 predicted. Let's see. Oh, they averaging in the low 5% range in 2024. Yeah, I don't know. Hopefully when the rates get lower, we see more inventory because that's been what's really driving home prices. So this is a new normal. That's what they're saying. Buyers are adapting to higher mortgage rates, which is the case, and need to buy lower priced homes. Yes, that is absolutely the case. But the problem is the inventory, right? And I also think that because buyers have got burned over the last couple of years when it comes to interest rates, well, not really interest rates. Buyers have got burned because of all the multiple offers that we've been seeing over the last, I feel like 2 years, maybe even 2.5. So pretty much right at the end of 2020, once 2021 kicked off, I feel like prices went up like a rocket and buyers had to compete. And luckily enough for them, rates were lower at that time. So you could kind of throw a little bit more money at it. But now that rates have gotten higher, whereas the inventory still hasn't fully recovered in Dallas. I know that in Austin, I was watching a podcast, one of my favorite channels to watch, Jeremy Knight with the Knight Group over in Austin. Him and Ian were discussing about Austin and how actually inventory in Austin is going higher, or the months of inventory that they have is getting higher. And typically in the fall, you will see prices kind of drop because we have more inventory and it's staying on, homes are staying on the market a little bit longer. Well, here in DFW, that's not really the case. We've seen, I would say we've seen more inventory than we had in 2021 and even 2022, but the demand is still there for a lot of buyers that want to buy, but it's just like the article was mentioning, it's just too unaffordable. Let me go back to the article, share screen. All right. Right. So the buyers have a big need for the lower home prices because rates are kind of offsetting some of that cost. I think the other thing to consider is incentives and buy downs, and even looking at adjustable rate mortgages temporarily as a temporary fix until mortgage rates hopefully come down. Now, unfortunately, we don't have a magic crystal ball to tell us when rates are going to head down, but it's actually better to buy which is weird to say, it's a little bit easier, I would say, to buy in a lower, when there's not as much competition. We'll just put it that way. It's easier to buy a home when there's not as much competition. You can negotiate with the seller. The transaction is more reasonable. You're not having to throw an arm and a leg and not ask for any repairs and do all sorts of crazy things just to get the house and then turn around and find out later that there's all these issues or problems and good luck, you know? So Okay, offsetting high rates is a scarcity of listings. This is absolutely true for sure in DFW. I know that Austin's numbers have gone up in inventory. Now, that could be also that we're hopefully maybe headed that direction, because the Dallas market in real estate, I feel like, has a tendency to follow what Austin is doing. So now that Austin has a little bit more inventory and prices are starting to fall, I'm hoping that once the Dallas-Fort Worth area gets a little bit more inventory, maybe that'll also cause prices to fall a little bit as well. So we've got, let's see, offsetting high rates is a scarcity of listings coming onto the market. Now a 4-year low. Yes, it's been the inventory levels have been really, really low, which is what they're talking about. Have noted that 97% of the U.S. mortgage debt is 6% or lower. Of that, 80% is below 4%, and 41% is below 3%. So I'm guessing people are putting more money down, and so therefore not having as much mortgage debt. So, for example, if you sell your house and you make $100,000, you're able to put that $100,000 in the next house that you purchase, and therefore your actual debt for your mortgage should be less if the price that the new home you're buying is relatively the same. So people feel locked in, have said they don't want to give up that really comfortable, super low mortgage rate. Yes, this is something that I feel is stagnating the market. It's kind of stifling people to like, I'm locked in at 3% or 2%. So they're locked into these incredibly low mortgage rates, and they're like, I've got 3%. I'm good. I'm fine. I don't care that I've got, 3,000 square feet and it's just me and my husband living here. We don't need to downsize. Like, I'm comfortable with the payment. I'm comfortable with this low interest rate. I'm not going to sell my house, by any means. I don't, now, obviously the big kicker here is going to be when that, usually the type of people that need to make a purchase or that want to move are those that have to move now. There are very few people that are just saying, oh yes, we're going to buy a home or we're going to do this. Most people that are making a move right now, they have to move, right? So they're relocating from another area, from another country, from another state, from one side of town to another side of town, from maybe closer to the city or maybe further out in the country. So those, or maybe they're relocating closer to grandkids. That's a very popular one for those that are downsizing. They want to be closer to family is another thing. Those that have gotten a divorce, obviously, they will sell their house and then part ways and either buy a house or rent for a while to get, some, get their with their legs back under them. Those that have passed away. So probate is also another reason why you could see a house for sale. And then you're going to have investors. Investors looking to move their money around, maybe put their money that they've made in multiple investments versus just one. So let's say that they have a house and they bought it for $200,000, and now they can go and take that. Now the house is worth double that. Let's say it's worth $400,000 now. Now they can take that money and actually put it as a down payment for 2 properties, and now they have 2 investment properties. So also too, another reason why investors could sell, like we talked about earlier, is if the taxes have gotten really, really high to where their profit margins have gotten smaller, and they're no longer wanting to hold that investment because it just doesn't make sense for them financially anymore with the way the market is. So let's kind of go back to the article again. Share screen. The locked-in effect is worse in California. Yes, I feel like unfortunately a lot of the economic crises. Unfortunately, I feel like a lot of them stem in California, where tax considerations like Prop 13 and capital gains tax create a disincentive to sell. Wow. So that would, yeah, if you're to even have more of a disincentive to sell, that would stink. While sellers typically receive an average 2.4 offers per home, they now are getting an average 3.1 offers. Wow. So looks like in certain parts of California, they're seeing multiple offers again. Meanwhile, American homeowners are sitting on a mountain of untapped equity. And I would say, guys, that's the biggest thing that I would like to share with you is that there are tons of people that are sitting on all this equity, all this cash that they have, and they're not wanting to reinvest it in themselves. Another, maybe they could put it in a 401k. Maybe they could put it in other investments. There's lots of things that you could do with that money that they're sitting on, but they're just a little bit too comfortable in their position, which I can totally understand with the economy being in such an unpredictable mess, why people wouldn't want to, just cash out that equity right away and just, throw themselves in a situation that would make them more uncomfortable. But I would say this is probably for people that, already have their maybe home paid off and they need to move closer to family and they are hesitant to cash that in. Well, instead of cashing it in, someone could try to cash flow it as well, because the rental rates have gone up for the single family properties here in DFW. So instead of, a lot of times people think the only option they have is to sell their house. Like, oh, I've got to sell my house so I can buy the next one. Well, that's typically not what I like to advise people. We need to look at all the possibilities, right, in order to make your money work for you and for it to make sense for you and your family. So like, for example, my husband and I, whenever we moved into our current house right now, we changed our current property into an investment property. And basically what we did was, because rates were higher, we decided to take money out through a home equity line of credit. We took that home equity line of credit, we put it as a down payment and covered all the closing costs for the new home. And then that home equity line of credit plus whatever we were paying for our mortgage is what we were able to charge the tenants that are currently in our home. And we're actually, we're actually cash flowing a little bit even in that situation. So that's been kind of nice. Now we have and we're able to keep that lower interest rate for the other house that we were living in for, I think we lived there for 5 years. And then we did the same thing previously as well, but instead of a home equity line of credit, because rates were so low, we were able to do a cash out refinance in that instance and still lock in, I think, 4%, which is ridiculous to say. We locked in 4% for a cash out refinance. I want to say, 6 or 7 years ago on the previous home. So we've been kind of house hacking our way into now 2 investment properties that we own. So I think letting people know that there's more than one option to get your money to work for you, that instead of just pulling all the cash out and selling the property, which could make the most sense for a lot of people, it's not necessarily the only option that you have. So just want to hone in on that point. Sorry. So let's go back to, sorry, I feel like we keep going back and forth. All right. During the first quarter of the year, the U.S. average homeowner with a mortgage had more than $274 in equity. Absolutely, I can agree with that 100%, meaning their homes were worth much more than what they owed. CoreLogic reported. Orange County, yeah, and it's going to be even more equity-wise in California, just because the appreciation just happens so much quicker in those areas. All the equity translates into more sales without a mortgage. 28% of buyers paid cash for their homes in May. So that's another thing. So let's just say that someone in California owns a $1.04 million home. Well, that's been kind of the problem here to our area, because there's such a high expense area when they relocate here to a lower expense area or a lower rate area, all they do is inflate prices because they can't afford, another $1 million house here. Or they can, instead of doing that, they'll take $500,000 cash that they had in the home or that they made from the sale of their $1 million property, and they'll just buy all cash $500,000, which is another reason why buying a home or investing in real estate is one of the ways that you can earn money, right? Or not earn money. Let me say that again. So building wealth. There we go. One of the best ways to build wealth that my husband and I know we've been leveraging, but even those people that have a lot of net worth will usually have properties as well. All that equity translates into more sales. Oh, we already read that. Sorry. All right. Offices are not dead. Yes, they are. I disagree with that completely. Rising interest rates cause the values to drop. All sectors of commercial real estate. Well, of course, yes. Things are very tight for investors right now. I mean, even those that want to invest in the residential real estate market aren't wanting to invest right now because rates are so high. But I think office vacancies are even higher just because there's not as much of a demand for that sector of the commercial real estate market anymore. All right, let's see. They're talking more about office vacancy, and that's all of this one. All right, I wanted to share about mortgage rates. And then if you have any questions, it looks like somebody commented, sorry. Oh, hey, Jose. All right. So let's take a look at what they're saying about mortgage rates really quick. All right. Mortgage rates soared even higher this week, averaging 6.79% for a 30-year fixed rate home today as of Thursday, according to Freddie Mac. That's a significant jump from last week's 6.57. As if that weren't enough to make home buyers' hearts skip a few beats, many are finding very few fresh listings on the market. Exactly. And the few that are for sale are mobbed with desperate buyers, despite high rates. Limited inventory levels have resulted in intense competition for fresh listings, adding to the budgetary pressures faced by prospective homeowners. All right, so Chief Economist Danielle Hale in her recent analysis. Let's see. So we've got median prices up, of course. New listings are down. Time on market. Maybe. We'll take a look at some local stats here in just a minute. Mortgage rates up 6.79. I think they hit 7 not too long ago, so they've actually come down a little bit. The fight for fresh listings, it's been 47 weeks and counting that newly listed homes have been on a downward trend compared with previous year. For the week ending May 27th, the number of new listings was down 20% versus the same time last year, creating what Hale calls a drag on home sales. And I think the other important thing that's not really in the numbers that you really need to know about when you are looking at these numbers is that it's not taking into consideration that buyers over the last 2 years are fed up. They're pickier. They want what they want. They have specific criteria that they're trying to fit in and squeeze in within a certain limited budget. And so what I think is happening is you get buyers that are super, super duper picky. And when one home or two homes, let's say, come on the market that checks all their boxes, then there's going to be a frenzy for that house, right? And I think it's more true with houses that are newer. I think we see more of a frenzy towards newer built houses. I think age plays a role. I also think that where the house is located in the neighborhood plays a huge role in this, because I've seen a lot of houses get passed up just because they back to those, what is the big power lines in the back? I've seen several houses that have sit for, more than, I would say, 90 days, maybe 120 days, just because of where the house is located. I've also seen negative, or houses sit longer days on market if they back to a busy street. So I really think that buyers are just being pickier about which house the frenzy is going to be over. And especially if the house has been recently remodeled or updated, has some sort of outdoor living space, back patio, pool, what have you, that there's going to be more of a frenzy for those types of houses versus just an average house that maybe hasn't been updated since the 2000. It has the gold shower, right? So I think that people aren't seeing some of these houses, or that there's houses that are sitting on the market longer because people aren't seeing the potential that some of these houses have. Now, I will say, as a buyer myself, I think it's important to really focus in on the location of the house. I think updates are something that you can do later down the road. I don't feel like they're completely necessary or mandatory. They are nice to have, and it's the work that's already done, which is kind of nice. And I know that a lot of realtors will say, oh, well, you can just do this. Oh, well, you can just do that. The chances of you doing that are probably very slim. But at the same time, you've saved money. When you do get a house that's not as fancifully updated as another one. And I feel like it puts you in a better financial situation that a lot of people desire and want to be in, especially in these uncertain economic times with inflation and the rest of the housing market kind of going bonkers. So I think that those are important things to kind of consider with some of the houses that have been sitting quite a bit on the market. I just really think buyers have gotten so picky. And when there's that perfect house that comes on the market, probably 50 others were eyeing it as well because it checks all their boxes too. All right, so kind of going back to, back to this article. Let's present, share screen. Okay. All right, anyone eyeballing the mortgage rates of late will understand why sellers are staying put. Yes, we've talked about that earlier. Existing homeowners benefiting from mortgage rates considerably lower than current rates. A reluctant list of their properties leading to a lag in new listings, explains Hale. Yes, so sellers or homeowners are wanting to hang on to that house, to that low interest rate, or considerably lower, right? Because they were maybe they locked in a 3, and that's like, it's double right now, right? On average, compared to what it was. Although new listing levels have plummeted, overall housing inventory, which also includes slate listings, okay, I don't know what that is up by 18% over last year, the week ending May 27th. Home buyers who are desperate enough to give these old listings a second look could land a deal, although it may not be their ideal dream home they've been hoping for. Yes, so this is where the opportunity lies in the market. So the opportunity in this market is going to be homes that are sitting on the market a little bit longer, and maybe they don't have that dream kitchen, but you can save up and put in that dream kitchen. You can save up and put in that dream kitchen later down the road. There is always opportunity in any market that we have. You just have to be smart enough to see where the opportunity is. The opportunity for investors is cash, right? So not having to sink your money into that high interest rate for investors is where they're going to be able to find deals, right? The deals for the current home buyers are going to be looking for that home that's in the right location, in the right neighborhood, but maybe it's not completely updated. But kind of looking past that enough to see the potential in that house is going to be where the deals are had in this market. And I think that's something that, especially homes that are sitting for longer than 60 days, in years past, a couple of years ago, I did see this opportunity in the market back in 2021. And I was advising people to take a look at homes that had been sitting on the market for 60 days or more. So when we take a look at homes that have been on the market longer than 60 days, right, we can kind of pinpoint, why maybe it got passed up. If it's location, for sure, I would cross it off the list, right? Because you can never move the home, but you can always change what's inside the property. So I think that's so to kind of wrap that up, I think it's super, super duper important now that I see that there are more people watching. All right, so let me go back to the article and we'll kind of sum that up. And then we'll take a look at some of the numbers here locally so you can kind of see where things are at. I may even pull up the MLS as well so we can take a look and see, within the last 90 days where are sales at in certain areas. So feel free, if you're watching and you want a specific area or me to kind of hone in as to where sales have been, feel free to put that in the chat, and then I will definitely look that up for you specifically. So let's take a quick look, and let's see. Nope, that's not what I wanted to do. I'm sorry. Okay, sure. Thanks for bearing with me. All right. Home prices are cooling and heating up. All right, so home prices rose nationally. All right, so they're rising nationally, which to me isn't surprising overall as a nation. I think it's risen more here in Texas, especially Dallas. And we'll talk about that in just a minute. Home price growth tickled up slightly this week. I think every major weekend we have seen whether it's like a 3-day weekend. So Memorial Day weekend was huge for sales. I saw a lot of contracts fly off the shelf. Memorial Day weekend, I've seen a lot of homes fly off the shelf this weekend because Juneteenth fell on a Monday. So that's another 3-day weekend. I feel like anytime there's a holiday or a 3-day weekend, I feel like more people are pouncing and getting homes under contract. That's kind of the trend that I've been seeing kind of week over week or month over month. Whenever there's some sort of a holiday and people really come and take a look at houses, we see a lot less homes on the market after that weekend. So why are homes taking longer to sell? Let's see, 13 days on the market compared. Let's see, for 45 weeks, it's taken longer to sell a home compared to the same week a year ago, when the gap exceeding 2 weeks. And I think what they're talking about here is taking longer to sell compared to last year. I think the big difference between 2022 and 2023 was that there was actually less inventory or months of inventory in 2022 than we have in 2023. We saw like half a month's worth of inventory still in 2022, and that's what drove prices up. And I feel like the shortening inventory squeeze that we've got right now for our peak season has also driven home prices up as well. Despite that, May data reveals that homes were snapped up quicker than average May from 2017 to 2019. Yes, like I said, there's a trend. Seems like once school's out, like the frenzy starts. And especially if there's a holiday weekend, people are going to be out looking for deals. So when the red hot market sparked by record low mortgage rates, so while the red hot market sparked by record low mortgage rates has cooled, homes are still selling faster than pre-frenzy norm, emphasizing the persistent supply-demand imbalances, Hale. Now, I would disagree with that, because I would say, yes, homes are coming off the market, but I would say they're coming off the market about the same speed, maybe not as lightning fast, because in 2021, we saw a house come on the market and then maybe a couple hours later, it was off the market. So I can see, comparing like a couple hours on the market to like a weekend being on the market and then off the market, I can see that comparison's, I guess, more true than not. But I feel like it's fast. It's still fast enough to where if you're not looking at it every day, you're going to miss a house. You're going to miss an opportunity. Where home buyer bargains are hiding. Yes, let's see. Mortgage rates don't seem poised to plunge anytime soon, and high home prices means buyers will shell out more in mortgage costs, averaging $280 extra per month if they make a 20% down payment. Right. So you're actually, I don't know if you pay, but they're getting higher mortgages because we have higher housing prices. And especially if they're not able to put 20% down, then you're also paying mortgage insurance. So with high prices and fewer listings on the horizon, how can cash buyers push past the market malice and snag a home? The solution for many might come in the form of new construction, says Hale. Now, that is true. If you have, a lot of people don't have $400,000 cash just ready to go, right? Unless they sold their mega mansion in a high dollar state like California or New York, or even some, areas of Chicago, right? So unless those, you just got that money or you inherited that money, I don't see investors really. There's new construction here in Texas. You have to understand that as an investor, as an investor, there are a lot of new construction builders. There we go. There's a lot of builders that will not sell to investors. There are some that will, and that have sold in the past. But there are a lot of builders that will not sell to investors, especially some of the bigger names or some of the more affordable products like Lennar and D.R. Horton. They are notorious for not allowing they're not allowing investors to purchase those types of homes. There are some, and if you want to message me about it later, there are some builders that have historically and traditionally allowed investors to purchase new construction, but it hasn't been, I guess, as well advertised. Now, I will say that with new construction, guys, if you are looking to invest in new construction, you want to make sure, a lot of times you're paying a premium and you're thinking as an investor, well, I won't have to worry about my heating and air conditioning unit. I won't have to worry about, my shingles. I've got all these, the roof shingles. I'm not going to have to worry about it because I've got all these warranties in place from the builder. And that's fine and dandy. That's great. That's worth something, I guess. But I feel like the real deals for investors are going to be these homes that aren't as pretty, right? They're not as updated. Maybe they're in a good location. They're not as updated. You go in, you spend some money, you not necessarily flip the home, but you make it more appealing, more attractive. You say to yourself, if I could move into this place, right? Or if it were on Airbnb, it would get a lot of, people interested in the property. So that's the kind of mindset that you need to have as an investor, because you're going to find better deals in not necessarily distressed, but properties that have been sitting on the market, whether they're overpriced or they haven't been as well cared for by the previous owners, to where you can put a little bit of money or a little bit of sweat equity into these properties, then turn around and rent them out with the strong housing rental rates that we have here in DFW. I had someone reach out to me recently and they said, Rebecca, I need to find a house that is for $2,000 or less, but it needs to be in North Dallas or Forney, or, we were looking all over. And unfortunately, I had to tell her that there were not that many homes in North Dallas, in DFW, that were available for rent at all, allowed for pets, because to me, it's difficult as a landlord, I know, being one myself, allowing for pets that would, rent to, sorry, let me kind of go back into that lane again. So there were not enough single family homes, just a 3-bed, 2-bath that was renting for $2,000 a month. I could not find it. I couldn't. I really couldn't, especially in a decent part of town. It was really difficult for me to find something that was 3 beds, 2 baths. So there's a lot of opportunity for investment here, especially in North Dallas, or even on the east side of town, where the tax rates, the county tax rates in Rockwall, are a little bit less than once you get up into Collin County, I feel like they go bananas. But and then even further beyond that, north of Collin County, I think it's Grayson, the property taxes go even higher. So, and as an investor, you also need to make sure, and I'm sorry I'm making this about investors, but as an investor, and even as a homeowner, taking a look at that tax rate for the house that you're purchasing is super important. And I think that if you can find an area with a lower tax rate, maybe that's new construction friendly to buyers or to investors, I think that that's a good place to start, because legislation wise, I don't feel like Texas is going to get the relief that it needs from the property tax relief, especially for investors. I don't think there's going to be any sort of relief. It's going to be mainly in the form of giving more money back to with your homestead exemption, and that way, I think is what the government is eventually going to do here in Texas. So, with Texas being one of the highest tax areas, I feel like property taxes is something that you, not only as a buyer here in Texas, need to be concerned with, but also an investor here in Texas. You need to be careful which area you buy, and you need to know what the property taxes are for that. And especially if it's new construction, like I mentioned in one of my shorts, make sure there's no extra taxes like a mud district or a PID district. And if you have questions about either of those things, let me know. I can go over some of those in a later stream. But I wanted to really emphasize that. Sorry. Let me get back to the article. Here we go. This one. Whoops. Okay. So let's see, fewer listings on the horizon, how cash buyers push the market. Okay, yeah. So in fact, the falling prices of new homes are making them even more appealing. Now, here's my tip on new construction. If you are looking at purchasing new construction, you will get a better deal for a house that is already completed and has been sitting on the market or sitting in their inventory pipeline. So houses that are just sitting there waiting for 30 days for contract to close or less is where you're going to find most of your deals for new construction. Excuse me. You're also going to find deals when it comes to new construction. If you're looking at new construction and you are because with inventory shrinking, a lot of people look to new construction. So if you're looking at new construction, not only do you need to be looking at inventory homes that are ready to go, but also I would say you need to be looking at some of the incentives, because a lot of the lenders will have incentives to buy down the rate. So especially, I know that D.R. Horton and Lennar, a lot of their lenders bought up some of those lower interest rates they're able to offer and able to give. So there actually is more affordability in some of those lower products, especially for first-time home buyers and for people trying to get into the housing market that are looking at purchasing their first home. So if you're looking at new construction, what are the deals? What are their incentives, right? Especially for homes that are ready to go. I mean, I was talking to a builder today, and he said, I said, when is this home going to be ready? He said, well, it's already ready. And I said, great. He's like, I've got a lot of incentives for that one. And I said, good. Tell me all about them. So they'll show you their hand if you, if you talk to them a little bit more. But if you're needing help with talking to a builder or finding new construction, let me know. I've been actively trying to look for a lot of that for some of my clients lately. So I have a really good insight on some of the builders here locally, especially those in North Dallas. All right, let's see. I want to share with you guys. Let's talk about locally what's going on. Let me see if I can find. Nope, hang on. Sorry for the delay. Let me see if I can. I know I downloaded something. No, there it is. There's the PDF. Let me see if I can. How do I share this? Oh my gosh. Okay, I think I'm just gonna have to pull it up in my email. we'll do that. So we'll share that tab. That'll be the easiest thing to do. Da, 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 da. Okay. Okay. So let's look at this. All right. So first, so this is for North Texas. So this is for all of North Texas. I'm not sure where the boundary lines are. So some of this data is probably a little bit skewed, just because I'm not sure where they draw their boundary lines. All right. So homes sold 9,000, sorry, 9,730,000. And then active homes on the market, we've got 18,000. Average price per square foot. Yeah, this to me is a little bit low. So that's why I'm thinking there's some areas that have a lower price per square foot. Most areas I've seen have right around that 220, 230, especially if it's new to the market and they're trying to see if they can get a bigger price for the home. Let's see. Average list price 500,000, just over 500. I mean, that sounds about right for North Dallas, but I think that also depends on your square footage. Average sold price 495,000. So it looks like you see how they're overpricing things, and that's a pretty big trend here in this market, especially if it's been sitting. It's probably price or condition that's causing the house to sit. Average days on market 43. That seems pretty high. So I'm not sure which areas of North Dallas, and that could just be as a result. So if it says average, so that might be, it may consider home, like a lot of new construction homes I've seen sit for hundreds of days on market, no problem. So I think it's because of that might be skewing the average a little bit. So Collin County, which I found out that Collin County is one of the most unaffordable areas in all of Texas. So congratulations, Collin County. So that would include areas like Frisco, McKinney, what other, oh my gosh, Collin County, parts of Plano. That would be Little Elm is in Collin County, part of Little Elm, I guess. And then we've got Anna is a part of Collin County. Anna, Melissa, Aubrey, Providence Village, Prosper, Salina, all those cities are going to be included in this Collin County report. So you can see that that's 225. That's about what I've been seeing on average for homes, and I would say that a lot of times it's even higher than that. So I can see where the unaffordability is. Average list price is $597,000, and then sold. So we still have people that are putting their houses on the market just for a little bit too much. 15,000 homes sold. Active homes on the market. See, I wish they had, I have to look at another report from another lender. It should say the inventory, because I think that's what I would like to see. Dallas County, it's right up there with Collin County, but it looks like Dallas County has been moving quicker. I think also part of this high days on market for Collin County is that there's just more new construction in Collin County than there is in Dallas County, skewing kind of the days on market. And I think that, wow, 258 per square foot. There are some really expensive parts of Dallas County, so that's probably bringing up the average. Active homes on the market. I mean, you can see like that's pretty close. Like we're ebbing and flowing pretty, like 2185 sold, and just 1,000 more on the market after they sell, right? So this, because this gap is so little, that's the absorption rate is looks like people are buying up a lot in Dallas County. Denton County, let's see, 1,400 homes sold, 2,400 on the market, 41 days on the market. Like I said, there's a lot of new construction up in Denton County too. Same with Grayson. I bet that, yep, see, Grayson's higher. Also, Grayson is more of a rural area, so I can understand. You can see the affordability in Grayson County, which is just north of Collin County, for those of the viewers that aren't really sure on where these counties are located. 187 a square foot, yes. I'd be curious to see what the land, I mean, because you're going to get more land up in Grayson County too, homes with bigger lots, typically. And I also too wonder if these homes include mobile homes as well, because there's a lot more mobile homes, or is this just all single family? Let's see. There's Hunt County, which is further there, and there's Fannin, just more affordable. I don't really. There's Rockwall County. Here we go. This is on the east side of Dallas. Wow. 509. But Rockwall is a smaller geographic county. So I guess that does make a whole lot of sense. I was like, wow, that's not very many homes. 198 a square foot. Yes. So there is more affordability, and it is more rural on the Rockwall County side. They're also building a lot. So I think that's another reason why this days on market is about 62. There are a lot of homes for sale that are competing with builders. So they're struggling with that issue over there on the Rockwall County side of town. Let me see if I can pull up. Give me 1 second. I'm going to try to pull up the other report that I've got. May. Here we go. No, that's a video. I don't want our video. What is this? Average days on market. Does it have the, I'm looking for, no, that's not what I want. Number of sales, sold volume. Oh, I want the inventory. I want the inventory. I want the months of inventory. Months of inventory. I'm super sorry, guys. I should have had this ready to go, but I thought that report that I pulled up had it. I just didn't look at it close enough, because I'm so curious to see where the months of inventory are at. All right, we'll have to go back to that, but that should give you an idea. And yeah, because the Texas Real Estate Research Center, I know some of the guys were talking about the affordability graph that they had, and I can't seem for the life of me to get it to pull anything that's looks like a graph. So I'm not sure what's going on there. All right, that's the May report. Okay, and this is one last thing that I do want to touch on. It's an article. Let me pull it up. Let's share screen. It is this one. All right, so this is from Channel 8 News. We got North Texas's 2023 housing market will be mirror image of last year. So last year, if you remember 2022, it was kind of slow to get started, and then it ramped up, and then it did its thing. This year, they're thinking it's the mirror opposite. So starting really strong and ending really slow. And that may also, rates may also play into that too. So it says, read the story. Okay. The U.S. economy is heading into an almost certain recession this year. The U.S., not the Texas economy. And for the housing market, the recession is here. Okay. But a national recession won't wallop Dallas-Fort Worth as hard, that's what I've been saying, as it does other areas of the country. And that goes for the North Texas housing market as well as the broader economy. Sorry. That was the theme of a real estate economic outlook session put on by the North Dallas Chamber of Commerce held Wednesday at SMU. Multiple speakers said the economic mantra should be stay alive till 2025. Wow. But the North Texas housing market should correct itself well before that time. Yes, I think it should correct itself. Who spoke on the housing market and moderated the event. We're like a canary in the coal mine, Kelly said. If you want to look where the broader economy goes, you can kind of look 6 months ahead and see where housing is. When the rest of the economy is like, we're in a recession now, housing will likely start coming out. We saw the exact same thing happen during the Great Recession as well. Dallas Fort Worth home prices were down 10%. Oh, in December from their peak in June, according to data from the North Texas Real Estate Information Systems. Now, I do agree with that because the last part of last year, so last part of 2022, I saw more inventory hit the books. I saw great deals that I couldn't like take advantage of at that time. And I was like, "Oh, look at this one. Oh, this is so good, right?" And then it was, sitting on the market for a reasonable amount of time, and I could have offered them less money. And I mean, there were some really nice houses, even some houses that were in a great location or had great features, and maybe they were pretty updated too. So, sorry. So yes, so home prices did go down I can see that going down 10%. I would say it probably didn't go that far down in Collin County, because Collin County is probably the strongest of the, if we're talking county economies, Collin County is pretty dang strong. And it's also not only that, but I feel like Collin County has, what you call it, just higher pricing in general. And I think it's only going to continue to get more unaffordable, which is why that if you are making a purchase in Collin County, I feel like you're spending your money well. The median DFW area home price in December was $390,000 median. So it's the most frequent number. DFW, I bet if we're talking DFW, so Fort Worth is definitely way more affordable than Dallas. So I'm sure Fort Worth brought down that average quite a bit. The North Texas housing market is much like the country's, is like much of the country's, soared in 2022 in terms of sales and prices, then cooled quickly as ever increasing rates took their toll, Kelly said. This year will likely be a mirror image, starting slow, then accelerating in the second half of the year. Yeah, I can see that. But I thought that 2022 started slow. Because when I think of mirror image, I think of opposite. Maybe they're saying it's going to be, maybe they mean exactly the same. I'm not sure, but I felt like 2022 started slow and then accelerated towards the latter half of the year. And yeah, I can see that being the same for 2023 because we did have kind of a slow start. There were a lot of people that had some angst about getting in the market because of rates and they just couldn't get over it. And then now they're finally like, you know what? I just need to buy a home. You can't time the market. Okay. That's the most important thing you have to remember, whether you're an investor or you're looking to buy a home. You can't time the market. Afford what you can afford. And then once rates go back down, because rates go up and down, once rates go back down, you simply refinance your home and you're actually in a lot better situation. Home prices nationally won't collapse like they did during the Great Recession, in large part because lending standards are far stricter and the supply of homes on the market is tighter than that period, Kelly said. But prices will continue to decline nationally, not in Texas, you said nationally, to a lesser extent in Dallas Fort Worth. Yes, prices in the fall typically can kind of fall because there's less demand, right? So if you have to kind of think of it, the real estate market goes through cycles as well. So typically in the winter months, it's a little bit slower. We have kids that are still in school. I would say towards the end of the year is different, but we'll think about it this way. In the summer, when everybody's out of school, that's when peak season is. Things start to dip in the fall because people are busy with other things, right? They're busy with holiday planning. They're busy with their kids' sports games. They're busy watching college football games on the weekends, right? So people are busy doing other things in the fall. So prices tend to fall as the pool of buyers shrinks. And usually we see inventory grow a little bit. And usually the buyers that are out there in the fall are going to be more serious as well. Then the other neat thing about to think about when you think about the real estate cycle is the end of the year. People don't typically think to move at the end of the year, but I've seen a lot of people do that lately. Whether they're relocating from another state, I've seen a lot of people try to get into something before the end of the year, or what I've seen with, you know, a lot of jobs will, let's say that you're working, you know, in one state and they say, hey, we're going to move you to Boise, Idaho, pack your bags, get your house ready for sale. So we'll see more homes hit the market then too, those that are needing to relocate out of the area because maybe they're getting a job transfer somewhere else. So we should see a little bit of that too. Plus, builders are aching to make a deal towards the end of the year as well. That's pretty typical. They like to clear their books at the end of the year. And so you'll see a lot of builders throwing maybe some larger incentives towards the end of this year, especially if rates can, you know, if the Fed says they're going to increase again towards the end of the year. Look for builders to offer some really good deals for their using their lender too. Let's see, home prices. Where were we at? North Texas housing market, like much of the country's, soared in 2022 in terms of sales. Then prices quickly cooled as ever increasing interest rates took their toll. Okay, we already read that. I'm super sorry. All right, home prices nationally won't collapse like they did during the Great Recession. I feel like we already read that. Yes. Okay, the Dallas-Fort Worth area is projected to be one of the top real estate markets in 2023. Kelly said, that's relatively speaking, but again, you'd rather be here because of the strong job growth. Yes, I agree with that 110%. I know Austin saw a big growth when a lot of big companies from California relocated their headquarters there. And I know that there's more even, you know, more people even relocating to those areas into the outskirts around Austin too, because of all their job growth too. And the same is happening here. We've got the PGA headquarters that's going to be in Frisco. That's going to create a lot of jobs. We've also got Texas Instruments building a new factory up in Sherman, Texas, which is it's almost the last town before Oklahoma, just to give you an idea of how far north Sherman is. And we've got I think there was somebody else was telling me. Somebody else said Disney, and I was like, no, I don't think so. Well, Universal Studios obviously is opening up their kid theme park, or they're more like baby kid, or what is it, toddlers for toddlers? I don't know. It's not going to be like a teen theme park, but Universal's opening their theme park in Frisco. I know they've been breaking a lot of ground there. There's a lot of new construction communities too here in the area that are really have a lot of money spent into these lagoon areas. We've got Anna Capri up in Sherman that's building this ginormous lagoon area, which I'm sure you could go swim in. It's like a giant swimming pool. Yeah, if you want some more information about the lagoons, let me know. But there's one up in Sherman. There's one in Anna. There's one in Princeton. I think there's one on the east side of town in, gosh, was it Forney or one of those areas. It's like in the Rockwall County, or just either Rockwall or Kaufman counties doing that. And then I think that's all on this side of town. I'm not sure about the Fort Worth side of town, what's kind of up and coming there, since that's not really my area or my area of expertise as much. But I mean, 4 or 5 different lagoon communities is going to bring not only a lot of people to those areas, but I think, business and commerce will grow there too. Unfortunately, though, McKinney's residents decided not to approve the commercial jet airline expansion for our airport. That actually came up for vote recently in McKinney, for those of you that are watching. And it got voted down. I looked up the results. It got voted down, but it was close. So maybe in a couple of years we'll do a revote. I don't know how that works, but I'm sure Mayor Fuller has got some ideas or some plans for how we can utilize that airport. hopefully it doesn't involve too much cargo and too much noise. But I know he was also looking at using it as more of a commercial hub for cargo jets, as well as potentially. So we'll see what happens to the McKinney Airport, because if that airport does become commercial, I think that would be huge for the North Dallas quadrant. So those are just kind of some things coming soon that I kind of want you guys to be aware of, as far as like the job market and kind of what's coming to the area. All right. So Charles Doherty, vice president and economist for Wells Fargo, said that he expects the Federal Reserve to hike interest rates by a total of 75 basis points in 3 25-point raises in the first half of this year. Is this an old article? Then hold at that higher rate through the end of 2023 to make sure inflation fully recedes and doesn't surge. Well, sorry, Charles, that's not what happened. They kind of did a little bit, and then they have kind of come down a little bit, and things have kind of stalemated as far as those rates have gone. And looks like they're planning to, from what I watched, they were planning to go a little bit higher towards the end of the year. All right, so let's see. The Fed is going to let a recession cure inflation, he said. The Fed does not have a surgeon's scalpel. They have a sledgehammer. The only way they know to get inflation down is by crushing demand, unfortunately. Yeah, that's a very... In my opinion, there needs to be more than one way. But anyways, the series of Fed interest rate hikes are having an especially severe impact on the housing market, yes, and home affordability, yes, and will continue to take a toll in 2023, yes, of course, as mortgage rates have gone from about 3% to as high as 7%. 3%, that was a couple of years ago. 7, yes. And it's gone even above 7 a little bit too. Buyers have disappeared, and sellers who refinance their homes and have a 3% mortgage rate aren't going to trade up into a 7%. Yes, that's what we've been talking about. So it's a frozen housing market. And this is the big reason why, especially with the buying side. Some 85% of all mortgage holders have a low rate below 5%, he said. Yes. I mean, if you bought a home within the last, when did I buy that other home? 2016. If you bought a home in 2016, I mean, you still locked in like a 4% rate. So that was even before it got even lower than that. Doherty, like Kelly, doesn't forecast a housing price crash nationally or in DFW. What you need for home prices to collapse is a remarkable increase in supply. Yes, we need an increase that we saw in 2008 and 2009. Exactly, because that's when I bought a home. And we're just not seeing that. Of course, single-family home builders are cutting production, as are multifamily builders, a bit less dramatically, he said. Dallas-Fort Worth's strong population and job growth will buoy North Texas in the likely, is that buoy? I guess so. Buoy North Texas in the likely recession ahead, he said. Demography is destiny. Or is it demography? Demography or demography? Demography is destiny. Sorry, he said. Dallas and Fort Worth have a lot of people moving in. If we go through a recession, if you've got strong population growth working in your favor, that's going to offset a lot of the harms from a downturn. Dallas certainly has that going for it. So guys, if you're thinking about waiting for prices to fall, or if you're thinking about waiting for rates to fall, I would say that's not good advice. So stop listening to those people that say, oh, well, you shouldn't buy now because blah, blah, blah. Stop listening to your uncle. Stop listening to your aunt. In my opinion, if you are ready, if you are willing, and if you are able to venture into this housing market, then you should purchase a home. It's going to save you money in regards to rent. If you're going to keep renting and renting and renting, it's not going to do you any good. It's not going to help you gain wealth. And I would also say too, just one last thing about this specifically is that people need to consider. Yes, rates are high. They go up and down all the time. But I would hate to be trying to fight 50 other people for the same house once rates go down. So kind of keep that in mind. The other thing that I would like to tell you is that there are people that are saying, "Oh, don't buy a home, don't buy a home, don't buy a home." Now, if you can afford to stay with friends or family until you get enough saved up for whatever you need, make sure you have money for savings to where you can purchase a home, but just don't delay because rates are super duper high. Don't let that scare you away. Take a look at the numbers, talk to a lender, talk to me, talk to someone who's going to advise you financially, and not just, from your Uncle Fred who bought a house 20 years ago and he bought his house for 20,000. Make a wise decision about your finances, because things are only going to grow. Things are only going to get better as far as your wealth, if you choose to purchase a home, especially in the North Dallas or Dallas Fort Worth area. Appreciation is here. It's not a lot of other places, but appreciation is going to stick with us here in the area. So that's my prediction. That's my 2 cents. I hope you guys enjoyed this live stream. I don't know if there's any other, hang on, no other comments. I'm going to get that data for you guys though. So the next time you see me, hopefully we'll be talking about the inventory. I think that's super duper important to take a look at some of the numbers for inventory to see kind of where we're at in the area. And then that should kind of give us a prediction as to maybe what's going to happen the last part of 2023. So have a great night, guys. I'll see you on the next video.